Today's deep dive into the world of market manipulation, synthetic shares, and the ongoing battle between retail investors and market makers in the context of AMC and GME stocks. In this video, we'll explore how market makers exert influence, the reality of synthetic shares, and the struggles faced by short sellers trying to cover their positions. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But everyone remember, this is not a financial advice video. Let's start by addressing a critical question. Do market makers and short sellers have absolute control over AMC and GME? If they did, the prices of these stocks would be at zero. But that's not the case. While they can suppress price action for a limited time, their power is not as overwhelming as many believe. It's evident that AMC has been a target for suppression. Despite claims from market makers about setting prices, they can't drive AMC and GME to zero. They can influence prices temporarily, but they don't have total control. This is an important distinction. The value of AMC is not accurately reflected in its current price due to suppression efforts, but these efforts have their limits. It's not just market makers suppressing AMC and GME, they have collaborators. According to a tweet from Joshua Sky, FINRA and the SEC are hiding FTD data, aiding naked short sellers by allowing tokenized securities to avoid physical delivery requirements. This regulatory gap creates an environment where naked short selling is technically not a violation of federal securities law, thus escaping immediate strong action. The SEC stance is that naked short selling contributes to market liquidity, despite its dubious legality. This loophole reveals the reliance of market makers on regulatory leniency to manipulate stock prices. Tokenized shares play a significant role in this manipulation. We've seen this with platforms like FTX and bittrex, where non-existent shares are used to short AMC and GME. This tactic creates a false sense of available shares, enabling further suppression. Evidence of synthetic shares is apparent in data discrepancies. For instance, Ortex reported 32.01 million shares on loan for GME, but a short interest of 39.4 million shares, indicating a gap of over 7 million shares. This gap suggests a lack of transparency and possibly synthetic shares being used to cover shorts. Short sellers and market makers are not providing the full picture. If true data were disclosed, we'd see hundreds of millions, if not billions, of shares being shorted for AMC and GME. The synthetic shares used for shorting are not accounted for, leading to significant discrepancies in reported data. This manipulation extends to Virtu Financial, a major player struggling with liquidity. Their cash position dropped from $820 million to $684 million, and securities sold but not repurchased fell from $1.7 billion to $1 billion, reflecting financial distress. Virtu's need to borrow more money highlights their liquidity issues and the pressure from their short positions. Short sellers are trying to hide their struggles. Despite their attempts to cover shorts, synthetic and naked shorts remain hidden, likely increasing in number. The correlation between declining cash piles and reduced short positions underscores the importance of liquidity for these entities. As they take on more debt, it's clear they're struggling to maintain their short positions. This financial strain is evident in Virtu's declining revenue and profit, and their increasing debt. In a related development, Gate added GME perpetual future contracts, mirroring the actions seen in GME S trades. This move is a strategy to prolong settlement for GME, avoiding immediate repercussions from exercised options. The return of Roaring Kitty caused a spike in GME S trades, highlighting the fear among shorts. Roaring Kitty's action, like buying calls and exercising options, could trigger a gamma squeeze, forcing market makers and brokers to find real shares to fulfill these contracts. This potential for a gamma squeeze puts immense pressure on shorts as they must locate real shares, which are scarce. Brokers and traders are feeling the strain. An outage that disrupted trading recently caused panic, leading to a drop in AMC's price to $5.01. While not as infamous as $8.01, this event illustrates the fragility of the market under pressure. Every small victory for retail investors adds to the cumulative pressure on short sellers and market makers. In conclusion, the battle between retail investors and market makers continues. Despite efforts to suppress prices and manipulate the market, retail investors are uncovering the truth about synthetic shares and regulatory loopholes. The financial struggles of entities like Virtu reveal the vulnerabilities in their strategies. As long as retail investors remain vigilant and informed, the tide may eventually turn in their favor. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.